Hello everybody. Today is Saturday, April the 5th, 2013. My name is Michael Wright and this is the Weekend LEA video. Just before going forward, please do pause the recording and read over the risk disclaimer. Alright, let's jump into the markets. As we take a look at performance, thus far we are up for the month. We just started the month off, so we don't want to count our eggs just too early yet. But a good start to the month nonetheless. Up currently 65 and a quarter pips, and we are bringing the new week with two open trades. A short Aussie dollar from 104.40 stops now at break even, and then a long pound dollar at 152.27. Alright, so let's take a look at both these trades. Worth noting that we already took off a quarter of the pound dollar. Okay, we took off a quarter for plus 73, and you can see that here. And now this is the setup on the pound dollar, right at 152.27, a nice breakout, right? And we're looking for further gains. Stops on the last half are at break even already, with targets still at 155. Meanwhile, for the Aussie dollar, we are still holding those shorts from 104.40. It was the congestion of the moving averages, the cluster. All right, we see the 10, 20, and 50. The 10 being the blue moving average, the 20 being the yellow looking one, and then the 50 period SMA on the 4-hour chart being the green one. So nice downside, and we are in a full position on that pair. Thus far, the Aussie dollar is now trading at 103.81. So this pair is moving well thus far, and we can see, if you take a look at now, how prices respected that cluster of moving averages. Thus far, that is holding up to date. So why still hold the Aussie dollar? For the first reason being because the weekly triangle. We have been talking about this for quite some time, and now we are still looking for this pair to really gain some downside momentum into the 99 area. Okay? Though we have been talking about that, we have been taking advantage of both sides. One thing is you can have a bias, but also to respect the market and move with the market. If you actually take a look at our performance, if we start off the month, we were short at 104.42 before. We got stopped at break even. The short Aussie CAD worked out well. The 3 quarters we closed out for plus 105, booking 92 and a quarter. And then we also attempted a long Aussie dollar around 104.53. We actually closed that out a bit early for plus 13, as we really didn't see too much upside, but it did run up. The ideal target here was 105.09. It never got there, but we did close it off with slight profits. So you can look at our performance, and then you'll see that all there. But to go back and remain on target, still looking for 99, looking for some downside movement, and now with prices below that 50 period SMA, looking for that downside ratchet to continue. From an Ichimoku standpoint, it also broke below the 4-hour Ichimoku cloud, adding further conviction to our downside bias. Move on the daily basis, the cloud is pretty thin, so we expect prices to attract those levels. So all in all, outlook still remains. Now this is interesting because the Kiwi is actually doing quite the opposite. Kiwi dollar, we will look to capture shorts later on, but that gives us the Aussie Kiwi, which is ripping massively to the downside. Okay, so watching that, I'm not really going to trade this pair, but just watching just to see how it comes to life later on. But you're looking at next support around 120.85, right, which is a 261.8% Fibonacci extension. Alright, meanwhile, the pound dollar, again, that's holding up well. Nice breakout. This is how we caught that pair, and looking for at least 155. In my opinion, the reason why that's so important is because that is also just around the 50% Fibonacci retracement on the recent downswing from 161.80 to 148.30. Okay, so watching for that. There is some momentum divergence that starts to become apparent. So we'll see how that comes to life. But we are looking for a fourth wave. The fourth wave could either come in at 154.94 or just around 156.55 before downside continues. Not ruling out the latter really coming true because that's just around the retest of the weekly area, right? 157.10 is going to be very, very critical, and that's where we'll be looking really for those shorts, okay? More so swing shorts for moves below 148. So watch out for that call. As you guys know, we pretty much like our 40 pip stop. We like risk to reward highly in our favor because at the end of the day, you still have to respect the market. All right. Aside from that, euro dollar, ideally doing the same thing. Right. Really no difference. Looking for a nice three-wave upswing. If the euro for whatever reason pulls back, in my opinion, that's a long opportunity. Nice clear divergence from the bottom, marking that fifth wave with that extended C part. We had a extended B wave, or you could call it extended third wave, whichever. But the truth remains that looking for at least a three-wave rally to the top side before the possibilities continue for the downside in the euro dollar. That gives us then euro pound. Euro pound not really doing too much. We see some consolidation. So for those range traders, this provides an opportunity for you guys. However, bias from my standpoint remains upside for euro pound. Not to overlook, we still have that open gap, which is just around 86.50. So watching for that before further movements lower. Aside from that, the yens are pretty remarkable. Euro yen, everything, every yen pair has shot up to the top side. We did attempt a short Aussie yen. We got stopped out of break even. On average, I should have taken off at least a quarter, but I did like the setup. But in any case, indeed, we have now broke to the top side. It's still difficult, in my opinion, to really capture the yens in general. So I'm just gonna stay away from it. Euro yen, everything just thrusted out. There's no every pullback is a as of late is appearing to be a buying opportunity. However, you take a look at this Fibonacci extension, 128 should be 128.10 should provide some ceiling top or some resilience for the euro yen. So watching for that. To capture that, I'll be looking more so on the Ichimoku base for the euro yen, and we'll look at the 4-hour chart. And with that being said, we will need to really see a move back below 122. So we filled this gap. We have 128 psychological resistance near, and from a pivot point standpoint, that's also a pivot. So a lot of reasons I'm not willing to top pick this. I'd rather next week. One pair I'm looking at really to start the week off, or just the beginning of the week, is the dollar CAD. So far, it is capped by this descending 4-hour trend line. So I'd rather see a 4-hour close back above 102 flat, and then I'll look to target moves for new highs. In my opinion, this could possibly a fourth wave developing, or just 1 2. So 1 2 3 4. So just modifying this count with deeper divergence on new highs before a deeper setback really comes to fruition. Alright guys, I want to thank you all for watching the Elliott Wave weekend video. Good luck trading next week, and I will talk to you all in the chat room. Cheers.